What can Taylor Swift teach you about insurance? Quite a bit. If you're a fan, you know that she had to cancel a couple of her concert dates recently. What you may not know is she, of course, has insurance for cancellations. So one of the lessons here is that the cancellation policies don't always have coverage for all events. So for instance, the article calls out that this particular threat that resulted in the cancellation isn't always covered. So they have to get a policy to cover those exclusions. So good job to whoever does risk management for Taylor Swift. Interestingly enough, the article also mentions that Taylor Swift usually doesn't have an issue getting insurance because she rarely cancels her concerts, which shows that insurers want to insure a good risk. Remember, underwriters understand that they're going to pay losses. They don't like to pay losses that they can't predict. As an opposite example, let's take Madonna. Madonna, don't get me wrong, I love the music, but is notorious for canceling and showing up late to her concerts. This is a risk underwriters are not going to like if they're underwriting a cancellation policy. So here are your two takeaways. 1, make sure that if you have a policy, look for the exclusions and find out if you have to have another policy to fill in the gaps for those exclusions. 2, make sure that you're a good risk. Underwriters are going to underwrite a policy if they know it's a good risk.